let's go. Break it down, put it there, bring it on, step it up, right there. Break it down, put it there, here we go. Step it up, bring it on, let's go.
Good afternoon and nice that you're watching. Welcome to this live and online program by Studium Generale of the Eindhoven University of Technology. We had some technical problems, so that's why we had a delay in starting this program. But welcome to today's lecture, Rebalancing the Dutch Economy. A lecture on economic inequality with the forthcoming parliamentary elections in mind. We've organized today's program in collaboration with students of BNR Beurs, the TUE Student Investment Society. And there's Tim. Yeah, Tim, hi, welcome to the floor.
Hi.
I would like to give the floor to you to tell us a bit more about BNR Beurs and also for a further introduction to the topic and our guest speaker today. So please go ahead. The floor is yours.
Yes, thanks, guys. Welcome, everyone. I'm Tim, the president of BNR Beurs Eindhoven, which is the Student Investment Society here at TUE. At our association, students meet with an interest in finance and investing to complement their engineering skills. We organize weekly events on financial topics, such as this one today. Next to that, we have an investment competition where we challenge groups of our members, so-called investment groups, to put their real money together and actually invest. It allows them to quickly gain practical experience and to teach them in a fun way how to make money on the stock market, basically, starting without any experience. And lastly, we organize weekly drinks on Wednesdays and plenty of leisure activities as behavioral finance, all the way to complex derivatives on the stock market, and from real estate to fundamental and technical analysis. Today we have an event about macroeconomics and financial policies, which is especially interesting, of course, with the upcoming elections in March. For this, together with Studium Generale, we invited Prof.dr. Dirk Bezemer. Dirk Bezemer studied agriculture and economics in Wageningen and Amsterdam. He worked on quite some projects over the years, including a European Commission research project at the University of London on development economics with the British Department of International Development, and also here in Groningen with a team of researchers building a database to enable research on the impact of bank credit on the growth, stability, and resilience of the economies. He has been involved in quite some organizations all around the world and conferences working on stimulating economic progress and world trade. Recently, he wrote a book on banking and money named Een land van kleine buffers, a country of small buffers, that is. His book discusses how financial regulations by the Dutch government could potentially have increased the financial inequality in the Netherlands, or inequality as a whole, over the last couple of years. And then he discusses how we should move forward in these post-corona days and what we should change, what we can change to improve the financial situation here in the Netherlands. In this talk, Dirk Bezemer will further elaborate on his view on this topic. I for sure is the right person to ask, so without further ado, I would like to invite Dirk Bezemer to take the word. Enjoy the talk, everyone. Thank you.
Thank you very much. Can you hear me loud and clear? That's great. I've got about 25 minutes, is that right? Yeah, so I'll try to keep to the time, thank you. I'm really pleased to be invited and honored to speak to this distinguished audience of engineers. In fact, I'm an engineer myself, so it's Prof.dr. Ingenieur in Dutch, but I'm not a real one because I studied in Wageningen, not at a technical university. So I'm an agricultural engineer, but that means something a lot less technical than what it means in Eindhoven, I suppose. what I'm going to say, by the way, has a lot of engineering applications, even though it's a bit different from what you're used to. If you're interested in investing, you're interested in stock markets, technical analysis, and so on, the things that Tim mentioned. The things I'm going to talk about is about the macroeconomy, but there are some really interesting system dynamics applications. So system dynamics modeling is also used to research the things that I'm going to talk about. If any of you is interested in applying your skills, if you have skills in system dynamics to this, get in touch with me and we will see what can be done. I'm now going to share my presentation. Is this visible? Yeah, Tim, can you see the PowerPoint?
Yes, it works.
Yeah, okay, just to be sure that otherwise, okay. This is the cover of the book that I wrote a few months ago. You can order it, of course, through your local bookshop, support your local bookshop, and of course, order the book. It's in Dutch. It is about the Dutch economy. And the subtitle is, there is enough money, but we don't use it in the right way. And it also says, with a scenario for the COVID-19 recession, we haven't had quite a recession, which is 2 quarters of negative growth, but it's probably going to be a recession, although it's very uncertain now how large and how long it will be. So here I tried at the end of the book to do some scenario thinking. But as Tim correctly explained, the main theme of the book is that there is inequality. Inequality in resilience, in financial resilience, so in how well people, households, firms can respond to shocks, and also inequality in income. So income and buffers, and I'll say a few things about both. My next slide is maybe a lot to take in, but here in one picture, I'm trying to give you my picture of the economy, my view of how the economy works. So this is if you like, a macroeconomic model. You could write it in equations. Here it's done graphically in building blocks. And if we start at the top, the economy is the total amount of incomes, both incomes which are spent on consumption and incomes which are spent on investment. So consumption and investment are the two great categories of the economy. Consumption and investment through the green arrow at the top lead to economic growth. So, of course, investment leads to economic growth. That's what we're used to thinking. That's supply-side economics. Firms that get more productive or innovative or entrepreneurial will generate more economic growth. But there's also a demand side. If the effective demand for goods and services increases because incomes go up, there's more consumption, then that could also be an engine of economic growth. And economic growth is income growth. That's how economists measure the size of the economy, the gross domestic product, BBP in Dutch. So economic growth is income growth, and there are 3 types of incomes for employees, for firms, and for the government. We have wages, profit, and taxes. So together, that's the gross domestic product. And how can the gross domestic product be used? That's the next step. So here we move from left to right in 4 ways. These are the 4 arrows, 1, 2, 3, and 4. And 3 of these arrows are green, and one of them, the 4th, is red, for a good reason. The money that is economic growth, that's economic income, is used either in the real sector or in the financial sector, which is a sort of artificial distinction. In the real economy, these things are intertwined, but the financial sector is all about the creation of credit and other means of financing and the handling of wealth, of what you own, of assets like shares and bonds and real estate. The real sector is about production and consumption, as we've just seen. And the real sector is not the same thing as the financial sector, and we have to keep the distinction in mind. And we're going to see how important it is. Okay, so total income can be used in 4 ways. The first is you can consume it. You can buy consumer goods with it, either durable consumer goods like cars and fridges, which will last more than one production period, 1 year, let's say, or other consumer goods which are consumed instantaneously, like food and clothing. Then it can be invested. So this means that income is used to buy capital goods from capital good producing firms like machines and robots. It can also be invested in sorts of capital goods that are not machines or robots, such as human capital. You can invest in your skills and education. We can invest in natural capital. You can see that I'm using the concept of capital here in a very broad way. If we don't have enough natural capital, we won't be able to run the economy in the longer term. There's no need to explain that, all the way from carbon emissions to the local park in your city. They're all necessary for us to keep the economy functioning. And finally, there is also social capital or societal capital. Those are all the investments that we have to make in the public sector, in police, courts, education, so it overlaps with human capital. The public sector is necessary. It's not the market, it's not the government, it's the public sector, and it's needed to keep society running. And without society, of course, there's no economy. The economy is embedded in society and is embedded in nature. So capital is machines and robots, like that's the way you're used to thinking about it. It's human capital, maybe also familiar, but the economy is embedded in nature and society. So also social and natural capital need investments. Now, those are the investments that ensure our long-term growth. That's the important part, if you like. Then the third way we can use our incomes is to build financial buffers, is to have liquid money in your savings account, for instance, or in your current account, to buy a new car if your car breaks down or your fridge. Those are buffers. Now the money is not used to do anything real with it, to produce or consume, but to keep it in a liquid, in a financial form. And the fourth way in which we can use money is, again, to keep it in a financial form, but now not in a liquid form, so that you can use it immediately if you need it, like a buffer, but now it's wealth. It's still something that you own, but it's in long-term assets. So it could be in real estate, it could be in bonds or shares. Those are in between, of course. You can liquidate those very quickly, or it could be in other long-term financial investments. So not real investment, but financial investments. And a special thing about this last category of wealth is that there is a feedback effect here. It tends to grow on its own. If you like thinking in terms of system dynamics, you're going to recognize some of this. A feedback loop is operating here in this way. It's easiest to explain it with the housing markets. More money poured into housing wealth through taking mortgages means that house prices go up. This makes it more interesting for investors to put money into the housing market, so that house prices go up, and so on and so on, right? And the same is true for the bond markets, the share markets, and all the wealth markets. And that's why the financial sector in total, the financial sector, that is the wealth markets and credit creation and insurance, all together, taken together, have a tendency to expand, so to speak, on their own without a link to the real sector. Now, the story that we tell ourselves about the financial sector is that it reflects the real sector. Okay, that there is this link, that if you buy shares, you buy the share because the underlying company processes are profitable, and that's why the share is going to increase in value. Or if the house prices go up, then that is because there is population growth or demographic change or income growth, and therefore more demand for housing. What I'm pointing to is that the financial sector and also wealth and wealth prices, like house prices and share prices, they can increase without this link to the real sector. They can increase all by themselves. And that leads to the processes that are the central theme of my book, namely small buffers, two small buffers with many households and firms, and not enough investment in the real sector and too much investment in the financial sector. So there is enough money, but we don't use it the right way. Now, this was quite a lengthy discussion, but we're going to need it when we look at inequality, which is the theme of this talk. You can see that all my slides are in Dutch because the book is in Dutch and all the presentations I do are in Dutch. But I will talk you through it in English. Here, this big red arrow with a square says here money is distributed between employees and employers. Okay, so if we start thinking now about why is there inequality, of course, we need to understand how distribution takes place, because distribution leads to inequality or to equality. The first place where distribution takes place is between wages and profits. And as I'm going to show you, the growth in wages has been much lower than the growth in profit over the last decades. So that's the first source of inequality. A second source of inequality is that red arrow, number 4, at the end that I've just discussed. That's also where distribution takes place. Here, it's distribution of profit, on the one hand, going to investment in capital goods and consumption by firms, and on the other hand, to wealth markets, to real estate markets, bond markets, and share markets. That's another point where distribution takes place. And both these distribution points in the macroeconomic system have acted to increase inequality in the last few decades. So in my book, I'm sketching trends since the mid-90s or since the turn of the century. Okay, well, here are some numbers to illustrate what I'm saying here. If we look at the GDP growth from 1995 till 2018, which was the latest data at the time I wrote my book, we've noted that GDP is wages and profit, and also taxes, but taxes are here included in wages and profit, so it's pre-tax. Wage growth in percentage point growth per year on average has been minus 4.7 percentage point. Profit on average has been plus 1.2 percentage points of GDP growth. So a bigger part of the gross domestic product, that's what the percentage points are about, is going to profit, and it's happened on average every year in the last quarter century. So that adds up to a big difference. That's the first distribution points where inequality has been created. Okay, there's some other graphs here showing, particularly at the bottom, the real wage income per hour. If you calculate it per hour, you can see that wages, even though total wages have increased, so wages in total have increased by 1% per year on average since the turn of the century, but per hour it has decreased. So employees have had to work more and earn less. And they have had to work actually more hours to even see an increase in their total wage, take-home wages. And of course, we've seen a lot of what's often called populism in the last few years, not just in the Netherlands, but also in the Netherlands. So the so-called Yellow Vest movement in France, which was also sort of prominent last year in 2018 in the Netherlands, has drawn attention to this, and it's difficult to interpret what's going on. But too often this is called populism, as if this was just about identity politics or has other causes, but it does have, I think, financial and economic causes as well. Because if you look at the distribution of real disposable income, and the statistics here start only in 2011, unfortunately, you can see that top income, so that's the top 10%, I think, or the top 1% even, I'm not sure at this moment, but they've seen their incomes increase by 32%, by a third. Then the top 40%, so that's the higher middle incomes, have seen an average increase of 1% per year. This is per year. This is not the 32%. This is per year since 2011. And then the bottom 10%, so those are the people who really live in poverty. I mean, the poverty rate in the Netherlands is about 9%. So this is all the people who are below the Dutch poverty line. That's the absolute bottom of the income distribution. Well, they've been relatively well cared for as well, fortunately. They have seen an increase in real disposable income of 2%. By the way, real disposable means real corrected for inflation. Disposable means after paying all your taxes and your rent and so on. So it's what you can spend on your everyday consumption, so to say. The problems are in the 5th to the 9th decile of the distribution, so above the bottom 10%, but not the higher middle incomes in the top 40%. And they've seen hardly any growth in real disposable income, right? So they've seen 1% wage growth, as we saw on the last slide, but only 0.4%, meaning almost zero growth in their real disposable income, in what they can actually spend, the stuff that ends up in their wallet, so to speak. So that's a source of inequality. The second point, where so I've now shown that wages have fallen behind profits, right? Now we also look at the use of profits, and here I'm using data on how firms use their revenues. Okay, so revenues is the total sales from output and from other sources of income that firms have. And they can use it in different ways. They can use their revenues to pay their workers. That's the blue line. And you can see on the right axis that this, as a percentage of profit, as a share of profit, it should be not a percentage. The share of profit going to workers has been roughly stable over the last quarter century. Okay. Second, firms can use their revenues to invest, to plow the money back into their firm, profit that they make, plow it back into their firm. That's the purple bars. And you can see that a quarter century ago, they were using about 80–90% of their profits of their revenues, to plow it back of their profits. Sorry, I'm wrong. Plow it back into the firm in terms of investment. But the third way is to use dividends, okay? And you can see that dividends have been growing from about 30% of profit to 80–90%. In 2018, it was even more than profits. So dividends is the money that is going from the productive sector, from firms. We're talking about non-financial companies here, right? So these are so-called productive firms. From the productive sector going to the shareholders of those firms who invested in financial assets. I mean, dividends is the return on the financial assets on shares. So we can see an increasing flow of money out of the real sector to the financial sector going to share markets. So we also, when I teach, in the textbooks, we tend to think about the share markets, the stock markets, as a place where households bring their money so that firms can take it and sell their shares and use it for investments and be more productive. That's not how the stock markets have been working over the last decades. On net, the stock markets in America especially, but also in Europe, also in the Netherlands, the stock market has become a place where on net, firms bring their money, bring their profit, so that investors can take it. So the stock market functions as a drain on money of the productive sector. This leads to the small buffers that I've been talking about. In the first place, small buffers in households. So 1 in 3 of those between 20 and 45 years of age have less than 3,000 euros in savings. 1 in 7 households couldn't get 2,000 euros if they had to do it quickly, like to buy a new car. So that's a lot of Dutch households who live in financial precarious, fragile situation. For a rich country, that's a very high percentage of households living in financially precarious situations. Also, when you look at making ends meet, so surveys indicate that 1/3 of people who rent, not homeowners, but renters, have problems making ends meet. They indicate so themselves. And 20% are in arrears, so they are behind on paying their bills. This is caused by the so-called wage moderation, which means low wage growth. It's often treated as a very nice thing, wage moderation, but it means low wage growth, the things that I've been talking about. Another cause is the flexible labor markets. 2.5 million of the 9.5 million working people in the Netherlands are now in flexible contracts or in very small businesses, micro businesses, ZZP'ers, which is a very precarious form of employment. Low capital income tax, which makes it interesting for firms to pay less to their workers and more to their shareholders in the form of dividends and buying back their own shares. And of course, globalization and technological changes also play a role in this. There's much more to say about this, but it's not the focus of my book. The second form of buffers that's very small is buffers not in households, but in firms. And we've seen that at the start of the Corona crisis in March. Many firms, even firms that had made a lot of profit in the years before, such as KLM or Booking.com, they had to hold up their hands with the government to get millions and tens of millions of support in order to survive. For instance, KLM in 2018 spent 200 million of their profit to buy back shares from their shareholders, which is a way of rewarding shareholders. If they had not used the money for this giving away of money to the wealth sector of the economy, but used it to build up their own buffers, then they would have needed less tax money. And that's true for many, many companies, many listed companies. So small buffers, both by households and by firms. Okay. So the inequality in income in the Netherlands officially is quite low. So the Gini coefficient is 0.28. The Gini coefficient is 0 with perfect equality, everybody having the same income. And it would be 1 if one person has all the income. So it's between 0, low inequality, and 1, high inequality. It's 0.28 in the Netherlands, which is quite low in international comparison. However, this does not take into account income from wealth. So income from owning capital and also from capital gains. So increases in the value of your wealth. And if you take that into account, there's been some recent studies for the Netherlands. The income inequality is much higher. Income inequality is rising, even according to the Gini coefficient, but also according to other measures. And wealth inequality, which is the inequality in what you own, not what you earn, but what you own, your wealth, that's very high in the Netherlands. It's 0.79. Concluding, we are a rich country and we are a relatively egalitarian country according to official measures. But if you focus on the distribution of wealth and the income from wealth, we can see that this has been depleting buffers in households and in firms. It's connected to seriously lower growth in wages than economic growth and profit. And so it's logical that a large segment of the population seems to have the idea that they're not part of the story anymore. They're not connected to the economic growth that we see in the headlines, the GDP growth. We should ask, well, growth for whom? And for a big segment of the population, that's the 9th to the 5th decile of the income distribution that I showed, there's been hardly any growth in the last 2 decades. This is very dangerous. It's not only dangerous politically, I think, but it's also inefficient. It costs effective demand. It means that the economy can now grow not as fast as it could grow because effective demand, that's the demand side of the economy, the demand engine is now smaller than it should be. And it's also inefficient, I should say, because less of our money is used for productive investments and too much of our money is used to be invested in the wealth sector. And that leads to higher debts. Think about the feedback loop that I talked about in the beginning between house prices and mortgages. And I'm ending here with a Financial Times editorial, which was written in April of last year, a month after the start of the Corona crisis. As Western leaders learned in the Great Depression, and after the Second World War. To demand collective sacrifice, of course, what we're doing now in the corona crisis, you must offer a social contract that benefits everyone. And today's crisis is laying bare how far many rich societies fall short of this ideal. And maybe you remember this sentiment in society from last year, where in March and April and May, the social media and the mainstream media were full of these ideas that now everything was going to be different, and this crisis was really showing that capitalism had to change. And even the Financial Times, which is of course a very conservative, careful paper, was writing things that you see in your screen now, and even talking about basic income measures and saying that we need to reverse the policy of the last 4 decades. That's very much true for the Netherlands. That's very much true for the Netherlands, as I've shown in my book. Okay, I must leave it at this, and I'm very interested in your questions and your remarks. Thank you. Should I stop sharing my screen?
Yes, please. Yeah.
Yeah.
Yes, I think then Gijs can also join us on the stream.
Here we are.
Yes, and I'm also back in the live stream as well. Professor Bezemer, thank you very much for your talk and explaining this. It's complicated stuff, but it's your graphs and your presentation, and also your book. Your book makes it much clearer to us. So thank you for that already. We have time for questions, but one practical thing already to mention is that for the use registration, the link to the use registration form will appear in the chat in 2 minutes. So that's for the students who would like to register. And let me see. And we have we are lucky that we have an extended time for questions today till 13:40 at the latest, so we have still time to ask questions and to answer questions. And if you have a question for Professor Bezemer, you can ask your question in the chat. Talking about the book, nice to know is that we have the opportunity to raffle one copy. So if you're interested in the book, you can send an email to Studium Generale, so to studium.generale@tui.nl with the subject book raffle lecture Dirk Bezemer, and you can send that mail before 1:45. So please send your mail before 1:45, and then we pick one, and maybe you are the lucky one who wins the book today. But going back to the questions, Tim, do you maybe already have a question for Professor Bezemer, or shall I start with questions from the chat?
I also see quite some good questions in the chat, but I first have one question. You talked about the dividends increasing over the last couple of years, which basically means that, well, the people that have the money to buy stocks get even more money out of the dividends, right?
Yes.
And now with Corona, you see that a lot of companies have decreased their dividends because they cannot pay them or even have cancelled them, which could be a nice opportunity to reset the amount of dividends to something earlier, to make it a more equal playing field. How would you go about making sure these companies won't rise their dividends to the previous level, but will maintain, let's say, the better or the levels that stimulate equality instead of the levels we've seen over the past couple of years? Is it by regulations, or how would you do such a thing in practice?
Yeah. So first, let me clarify, I'm not against dividends. Dividends are the reward for shareholders who invest in a firm. So that is of course a good thing. However, as I've said, when the dividends are too high, and it's not just dividends, it's total payouts, and payouts is dividends plus share buybacks. It's become a very important way of rewarding shareholders, has become share buybacks. And many firms even borrow, and also in the Netherlands, borrow in order to pay dividends and buy back shares. So to call this profit sharing is actually wrong. It's not profits that they share, it's borrowed money that they share. So of course you can wonder what's going on when firms who are supposed to be productive borrow money in order to pay out dividends. And there's no production in between. And that's the thing that's gone wrong. And dividends and other forms of payout come now at the cost of productive investment and innovations and wages in the firm. And the way to bring that down again, that's a hard one. I think what an important reason is what we call shareholder capitalism, which is the idea that the shareholders are the owners of the firm. From a legal perspective, that's not true. There are various stakeholders in the firm, workers, shareholders, management, but it seems as if the shareholders have become the most important part of the firm who need to have all the money. So it's a shift in norms. So what is normal to pay as dividend? So there needs to be a change in norms. And in the business community, in the corporate community, there is an increasing awareness that this has really become crazy. So that is one thing. The second big thing is taxes. If you look at taxation of income from capital, it's very light. It's very light compared to taxation of wages and VAT, BTW. Taxation of wages is punishing work, and taxation VAT, value-added tax, is punishing transactions, is punishing activity. So you should make that as low as possible. And taxation of wealth is punishing, discouraging the buildup of wealth. And we have far too much wealth in the macroeconomic system. Of course, if you happen to be rich and wealthy, that feels good. And everybody wants to be wealthy, maybe. But for the economic system, it's not good. Okay, so we need to change the tax system, increase taxes on wealth, including real estate. That's an important part of wealth. And decrease taxes on labor. And there is actually a plan by Professor Bas Jacobs from the University of Rotterdam and other specialists who have published about a year ago a plan for a better tax system. So I'm discussing that in the book. If you want to know more details, read a book about that. All the plans are there. We just need to do it.
Okay, but do you think that a big driving force of money that flows to stock market is due to the fact that most people want to be financial independent?
That's very nice to be financially independent, but all the wage earners also want to be financially independent. What about them? Look, shareholders, share ownership is concentrated at the top of the income distribution, right? Of course, we all, through our pension systems, we all own shares, but that's very little per person. The largest part of shares are concentrated at the top of the income distribution with the rich people. So if you want to do something about increasing inequality, and it has increased already, you should increase wages, not dividends.
And is that the first step to take?
Yes, it is.
To reduce the inequality, and is it a step that the government should take? And
absolutely, absolutely, yeah. I already mentioned. I think there are two big changes that can reduce inequality. The first is changing the tax system. I've just talked about it, and there's also, my book is not a utopia book. It's not one of those books that says, end capitalism, build a very different society, reset the economy. No, I'm showing with data from the official sources what's going on, and I'm using plans by reputable, authoritative committees and specialists to say what we can do now. The first is to change the tax system, and the second is to change labor market regulation. The labor market in the Netherlands is incredibly flexible. So labor market flexibility has been a mantra of all the cabinets in the last 20 years for a long time. Now, this trend was finally reversed last year, well, the year before last, in December 2019. The so-called Boslap report appeared, which is a government-appointed committee which reported on the state of the labor market, and which was very, very critical and said that the way we have built the labor market with so many workers, 1/4 of people in work which are in precarious contracts, ZZP'ers or flex contracts. This is not an individual problem for them, but it's a social problem. And I think in the corona crisis, we're going to see it. And so read the report or read my book where I discuss a number of those measures. We should change the contract habits in the labor market again to create more stability in employment, which also gives workers a better negotiation position towards firms. And that will contribute towards the higher growth of wages.
Okay, thank you. Looking at the chat, why are the companies not forced to sell shares if they need liquidation instead of being helped by taxpayer money? Why aren't they forced by the government?
I've actually, and I haven't been the only one. Professor Arnoud Boot from the University of Amsterdam, for instance, also has advocated that the form in which the corona support has come should be like this. It should be so firms. So it shouldn't be a free gift. I mean, there should be conditions. And again, in other countries like in Denmark, many more conditions have been attached to the help that has been given to firms. For instance, that they couldn't pay dividends or couldn't buy back shares anymore. Some companies are decent enough not to do that by themselves. Actually, they would use taxpayers' money to do it. Also, of course, ecological green measures.
For example, KLM, who should maybe start a transition to.
But it's far too late. This government has already given, I think, 4.5 billion euros to KLM without any conditions. So this is
Since the start of the
corona
crisis, or maybe
they have promised already. They are paying it out now. They are paying it out in conditional on this, that, and the other. And whereas other governments have actually demanded from firms that they also protect jobs in support in exchange for support. In the case of KLM, the government actually demanded KLM that they fire people if they want to have the money.
But how to stimulate them to increase their buffers and to?
It's a bit like the same story as for the great financial crisis of 2008, where banks, of course, were getting the bailouts. Banks didn't have enough buffer of their own, about only 4% capital buffer, which is ludicrously low. They didn't have enough buffer, partly because they were insured by the governments. There's the deposit insurance scheme, which is necessary, but that acts. And it's also the political economy that if a bank is big enough, they know they're a so-called systemic bank. And they know that even if they would go bankrupt otherwise, they won't go bankrupt because the government will bail them out. That sort of thing is going on as well with especially multinationals, Dutch multinationals and big firms. They have low buffers because they think they can afford to.
Okay, and a bit related question from the chat, talking about KLM and the sustainable transition. Is there enough money in circulation within the large corporations to pay for the energy transition if a large-scale economic crisis is taking place?
That's a very good question. Thank you very much. So the title of my book, the subtitle of my book is Er is genoeg geld, maar we gebruiken het verkeerd.
Yeah.
There's enough money, but we're not using it right. Actually, what I'm showing in the book, there are billions of money circulating in the Dutch economy in the wealth markets and flowing out of the productive economy of what we think of as the economy, right? Firms which produce and sell and workers. What we think of as the economy flowing out of that into shares and bonds and real estate. All that money could be, much of that money could be redirected towards much more useful goals, such as the green transition. We are one of the richest countries in the world. We have a fantastic credit rating. We can borrow money and actually be paid for borrowing money in the international bond markets. There is no lack of money. Money is not the issue.
Yeah, we have to rebalance it. Tim, if you have a question, please go ahead. If not, then...
No for me anymore.
Okay.
Some in the chat that are still quite interesting.
Professor Bezemer, what's your view on a basic income? Could that be a solution, or that's also a question from the chat?
Yeah, thank you very much. It's interesting that, so we have had 30 years of what's now called neoliberalism often. And the result has been very high levels of debt, very flexible labor markets, which means insecurity for workers, low wage growth. In the United States, the average wage hasn't increased for 40 years even, and high inequality. In response to these failings of the capitalist system, right? A number of radical proposals are now being made. A first radical proposal has been to basically nationalize the money system, to not let banks create money, but have a public money system. A second proposal has been basically to nationalize employment, to have a job guarantee scheme where the government employs everybody who wants to be employed, who would otherwise be unemployed in the private sector. And a third radical proposal is basic income, which means guaranteeing income to everybody, regardless of whether you're in work or out of work. Mm-hmm. So there's too much to say about this, really, to discuss it here. But I think each of these proposals are radical in the sense, and I'm not against the radical ideas which go, but they're radical in the sense that they require a big change of the whole system, the whole monetary system or the whole labor market system. I think I'm more in favor of doing the things that we can do instead of discussing the things that maybe we cannot do and which require a very large change of the system, which may not be doable. Because the danger is we end up talking about it and not doing it. So why don't we do the things that we can do first, reform the labor market, reform the financial system. I haven't talked much about that here, but that's part of the book as well. Reform the tax system, and those are radical changes. When it comes to the tax system, this would mean that the tax on wages could decrease by percentage points, by whole percentage points, up to 9 percentage points in the plans that Professor Jacobs and others have advocated. Those are big changes. Those are going to make an enormous change to the people at the bottom of the income distribution. Reform the labor market according to the Boslab reports, and you give them security. So a lot of the goals that the people who advocate basic income want to achieve can already be achieved by, well, relatively moderate plans compared to basic income, but which are radical and which are a real reversal of the policies that we've seen over the last 30 years. So I would really put my energy and my time into doing the things that we can do immediately and where experts already agree on how to do it.
Okay, thank you. Let me see, there's a question coming in. To what extent do you believe that the growing gap in wealth is a Dutch problem and not a global problem? Or is it maybe a global problem?
I don't believe that it is a Dutch problem and not a global problem. Not at all. It is a global problem. All the indicators are it's a global problem. So we have to be careful here. The inequality between countries has decreased in the era of globalization since the 1990s. I mean, the tens of millions, hundreds of millions of people in China who've been lifted out of poverty, means that China has caught up with the rich countries, and so inequality has decreased. But inequality within countries has increased, also in China, but also in the Netherlands, and also, of course, in the United States and the United Kingdom especially, but basically in all countries. And in the Netherlands, this is still relatively moderate, the increase in inequality, but within the Dutch context, it's quite large. So it's definitely a global problem, and you can see especially in the United States and the United Kingdom, how it polarizes societies.
Okay. Well, the elections are coming up, so we have the opportunity to make a democratic choice to choose our party that represents our ideas, the direction we want to go. Do you think that the politicians have enough knowledge of economics to make the essential changes, to come up with the essential ideas, and to, what's your opinion on that?
Yes, I think they do. There are some very good financial and economic specialists in the in Parliament. But more importantly, even if they don't know all the details, that's not their job. Maybe they have specialists like the Borslab report, like the Jacobs tax reform plans. The plans are there. The specialists have explained how to do it. I've just outlined what the problem is and what the solutions are. If you've been able to follow me, then surely parliamentarians will be able to understand this and to read the book. The book is written for the general public, and it's very clear what needs to be done. It's not rocket science. It's not very complicated. Of course, those who want to maintain the status quo will say that this is all very complicated and you can't just change things, blah, blah, blah. That's not true. It's very clear what needs to happen, and it can be done.
Okay, and there's someone in chat who is specifically interested in the ideas and the policy of the VVD. Do you think the VVD would be open to these kind of reforms?
I am optimistic about this. Of course, the track record of the Liberal Party, the VVD, is not good. So we have had cabinets with them, with the current prime minister since 2010, and basically we're now in a mess, and that's because of what's happened in the last 10 years and the last 20 years. It's not just the Liberal Party. Neoliberalism is something that has really happened in society and in politics, and it's also happened with the Christian Democrats and the Social Democrats, who have embraced flexible labor markets, who have embraced the growth of debt and the expansion of the financial sector at the cost of wages. So it's not just something that the Liberal Party has done, but of course they have very actively advocated it. Also tax. We are a tax paradise together with Malta, Cyprus and other dodgy countries. And that's something that all the political parties have condoned, almost all of them. But I'm hopeful because in the last politieke beschouwingen, the last parliamentary debates after the budget in September, the whole of Parliament was in favor of a stronger government, meaning that this was, of course, because of the corona measures, which showed how necessary a strong government is. But also in this atmosphere, which I talked about, that this shows something about what's wrong in society. All the political parties sort of agreed to that, and at least they said, I mean, what they do is what we need to wait for, but they said last September that they are in favor of a stronger government and, for instance, higher minimum wages. Also, the Liberal Party has said that they are. However, we've seen before that promises are made in advance of elections, and then the elections follow, and the real policies are made. And again, we need to watch very carefully. There's lots of indications that, for instance, that civil servants in the Ministry of Finance and many politicians still want to implement budget cuts to reduce the government debt back to levels before the corona crisis. The government debt is now not high. It's only 60% of GDP. The private debt is 260% of GDP. It's more than 4 times larger. It's a much bigger problem. That's the financial expansion, which is the problem. But it's so popular to talk about government debt as a problem, and to I have a whole section in my book about the public sector and how there is a lack of money, a lack of investment in the public sector. I mean, even judges and in the courts and the police, they are complaining about a lack of money. And I mean, we are a rich country. It's a scandal, really. So I'm hopeful because all the political parties, including the Liberal Party, are making the right noises. But we will need to wait and see. And we will need to, then there will need to be a lot of pressure from the public. I mean, I think the public needs to make clear that we don't want this kind of economic model anymore.
Okay. A last question. It's a question with a topic important for students. Last question to end this session, and there are still some other interesting questions, but we don't have the time to answer all the questions. How does the student beurs, the studentenbeurs, loans versus loans fit into this? Would your argument not be that a basic study burst is better for addressing inequality?
Absolutely. I'm completely in favor of abandoning this student debt system as soon as possible. This was a bad idea. And by now, finally, it seems most political parties agree. So hopefully it will be abandoned. It's something that fitted perfectly in this whole idea of neoliberalism, that everybody is responsible for themselves. If you want to study, then you must borrow the money yourselves because you borrow it against your future income. In the United States and the United Kingdom, we can see what it leads to. This leads to very large individual debt problems. And it's already doing that for young people in the Netherlands. So to give everybody equal access to education, basic income for students is a good idea. And we used to have it, and we need to bring it back.
Okay, that's a clear statement. And that's also a nice statement to wrap up this session. Thank you very much for giving your talk and answering all the questions. For everyone watching, thank you also for asking your questions via the chat. And if you'd like to win this book, you can send an email to Studium Generale. There are 2 minutes left to send your email, so be quick. Tim, also thank you very much for coming up with this topic and organizing this event together with us. So thank you very much and hope to see you next week.
Thank you very much, Tim. Thank you very much, Gijs, for this. And thanks for giving me this opportunity. Buy the book, and I look forward to your responses if you have them. Thank you.
Thank you, and hope to see you next week. In 2 weeks on the Wednesday. Bye-bye.
Okay, bye-bye.